Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur, property investor, and it is that time of the year, the end of 2024, where I need to do a video on my house price predictions for 2025. And what I'm going to do in this video, I'm going to go through three main points. Number one, I'm going to cover what the risks to house price growth or what the reasons might be for a house price contraction over the next 12 months. Number two, I'm going to go through what reasons we have to be optimistic and what might cause house prices to rise. And then I'm going to give my predictions alongside some other market commentators like Savills, like Nationwide, like Rightmove, Zoopla, for example, so that you've got a plethora of information to be able to go on when it comes to making your decision on what you think is going to happen to house prices in 2025. Now, if you like this sort of video and if you like this sort of content, please give it a big like. It helps me out with the algorithm. And if you haven't already subscribed, consider subscribing. Until I get to 10,000 subscribers, you can book a free one-to-one call with me anytime you want on Zoom, and all you've got to do is click the link in the description to do that. So let's get into the video and let's cover, first of all, what are the risks? Now, unless you've been living under a rock, you will know there has been a change of government. And with the change of government, there has been a change of policy. The change in policy is widely regarded by the business community, certainly, as anti-business and anti-growth. Now, there will be some people watching this who are going, no, I run a business and I think it's very positive. Okay. Generally speaking, if we look at the commentary, when it comes to the rise in national insurance, when it comes to the increasing in taxation, generally speaking, the business community believe this to be anti-growth. And many people, including myself, are predicting a rise in unemployment. Now, whether or not you agree that that will happen, these are just predictions, right? And generally speaking, capitalism will always find a way to make use of excess labor. However, in the scenario where there is rising unemployment, and as a result of that, a lowering of transactions taking place, then the environment for house price growth becomes much tougher. So the first risk would be rising unemployment due to policy changes, especially on the NI side of things, which is a tax on jobs. Now, the second risk I would cite is inflation, and inflation in particular being connected with interest rates. So if we find in 2025 that there's a spike in inflation, then we'll find that the Bank of England may deem it necessary to raise interest rates to keep that under control. Now, why would there be a rise in inflation? Because we're also predicting this potential rise in unemployment. Why would there be a rise in inflation? Well, the reason is that Labour and this government are looking to borrow a lot of money and spend a lot of money within the public services. So that may cause a rise in inflation. And if it does, that's a risk on interest rates. At the moment, though, and this will be on my positive side very shortly, we are predicting interest rates, including the Bank of England's predictions, to drop dramatically in 2025. So those are two of the main risks, certainly if you look nationally. Internationally, there's far more risks. There's wars going on all around the world. There's lots of uncertainty with geopolitics. Now, it's very hard to predict what's going to happen in any of those scenarios and what the spillover for us back in the UK will be. But there is definitely a broader risk category when it comes to geopolitics internationally than there has been for many years. Now, if we bring it back to a more positive outlook and we consider what might happen to the positive, well, we do at the moment have inflation completely under control. It is dropping down to the Bank of England's target. The ECB has just cut interest rates. The Fed has been cutting interest rates, and we are highly likely to be cutting interest rates as well. Now, why does that matter? Well, in 2024, what you've seen is a lot of house price growth in areas where property prices are low. And where property prices and affordability will be stretched, there has been little or no growth. So if you consider, for example, a £100,000 mortgage on one of my Sheffield houses, at 6%, I'm paying £500 a month. At 3%, I'm paying £250 a month. Now, that's not a big difference necessarily for somebody who's going out and earning a wage and maybe is on 30, 40, 50k a year, who are having it as a personal house. Now, they may have a capital repayment element to it, but that bit will stay the same. It will only be the interest that will really differ. Now, if you consider those interest rates on a much larger property, and I've got a property over in London that's got a £300,000 mortgage, well, that £750 a month payment has just become £1,500 a month. And I can tell you right now, the rent on that property is only £1,600 a month. So there is no margin in it whatsoever. And that is really restricting house price growth in some of those more expensive areas. It makes it unaffordable for investors and uneconomical to invest in completely. But I will do a completely separate video on my opinions on the London property market when it comes to investing in the next couple of weeks. So subscribe if you haven't already, because that one's going to be a good one. So positive side, we're looking at interest rates, right? We're looking at those areas where house prices are already high becoming more affordable. So that, again, using that example of that £300,000 mortgage, instead of it being £1,500 a month of interest, if that drops back down to being £1,000 a month of interest, well, the person going out earning 30, 40, 50 grand a year can suddenly find that far, far more affordable. And affordability is really the main reason that we haven't been seeing house price growth in those areas. Now, to really hammer home that point, if you consider the entire of the UK over the last 5 years, property prices have grown by 21%. In London, the most expensive area of the UK, house prices have only grown by 12%. And that really highlights what affordability means when it comes to house price growth, especially in a high interest environment. So I expect interest rates to come down. Goldman Sachs are predicting 2.75, Bank of England are predicting 3.75. I'm going to go on the more optimistic side of things. I actually think that rising unemployment will lead to lower inflation, not higher inflation with all the spending that's going on. I also believe that we will have to stimulate the economy and prop it up, and low interest rates are a way to do that, to put money back in people's pockets, to mean that they can afford to go out and spend more money and keep that money circulating. Velocity of money is so, so important to a modern economy. So we now covered off the positive side to interest rates and how that will fuel house price growth. Now, my second point on the positive side would be that we still have a growing population. Last year, the population grew by about 300, 400,000. We are looking at growing the population again in 2025 through births, through immigration, through all those good bits. That means a rising population needs more housing, and we are still undersupplying the housing market. Now, I know Labour have come in and said that they are going to build 1.5 million houses during this term, but they're already miles behind. Firstly. Secondly, with higher interest rates, builders aren't that confident that they're going to be able to sell these houses. And thirdly, it takes a long time to build these big housing developments. It's highly unlikely that target will be met, and even if it is, it will only still be net where we are today. And with that in mind, I think supply will still be outstripped by demand going into 2025 and 2026 and 2027. And we all know if the affordability is there and the economics supports it, supply and demand will mean that house prices will rise. I'm not a genius because I said it, it's just a fact. It's just what happens with basic economics. So I think that supply and demand, certainly in the UK, is still on that ebb. And the third thing I would say is culturally, we all want to have property ownership. I think that's a really strong thing for the UK. People aspire to own a home. We have lots of support in place for first-time buyers, things like the LISA, which is absolutely fantastic. I would recommend that to anybody who's looking to buy their first house. You know, you can put £4,000 in a year, the government will put in another £1,000. When you come to buy your first house, you can use all that money, all that extra 25%, and use that as a deposit. 10% mortgage, you only have to save up £15,000, £20,000. You can get that knocked out in 2 or 3 years. So I think we have lots of support there for people who do aspire to and want to own property. We have lots and lots of opportunity when it comes to interest rates, and we also have lots of opportunity when it comes to the supply and demand side of things. So on the positive side, we have quite a bit stacking up, which leads me to the final point, which is what are those predictions? So Savills are predicting for the UK for 2025, 3.5% overall house price growth. And they've broken it down by region, and I will put that on there. Again, they are saying the more expensive areas are going to lag behind. And if I look at my portfolio over the last 5 years, I've got Sheffield, I've got Wellingborough, Kettering, Corby, I've got Didcot, I've got London, I've got properties all over the place. without a doubt, the cheaper properties have outstripped and outperformed the more expensive properties in a high interest environment. Just no question. It's night and day. There's a massive disparity in those house price growths. And Savills are saying that in 2025, it's highly likely that that's going to continue. Now, my next predictor is Rightmove, and Rightmove are saying that house prices are expected to rise by 4% in 2025, which is its highest prediction since 2021. And do you know what? I think when it comes to my prediction, I'm going even more positive in Rightmove, but let's have a look at the next market commentator, who is Hamptons. They have a slightly less positive outlook. They're saying it'll rise by 3% in 2025 and 3.5% in 2026. We'll do another video on 2026 at the end of 2025. But they're saying 3%, so far we've got between 2.5% and 4%. Hamptons, Savills, and we've got Rightmove. Let's see if we can find one more commentator. Interesting, I was just looking at the Zoopla one. They've covered a lot of points for their predictions that I have. They are predicting a 4% rise as well. So let me stick my neck out there. What am I thinking? December next year, when we come to do this video, where a house price is going to be. I'm going to stick a number of 5%. I am going to be the most positive of all the people that I've looked at. And I just think that I know so many people anecdotally that if mortgage rates came down to that 2.5–3% sort of number, and we were able to borrow, and they were on a downward trajectory with that being expected to continue. Bear in mind, I've just done a remortgage at 4.75 and the Bank of England rate's 4.75, because the market is getting competitive, knowing that more rate cuts are likely to happen. We could be fixing at the back end of 2025 at somewhere in the region of 2.5% to 3.25%. And that would just make the market so affordable. So I think 5% growth. I'm also going to cite one more thing. I think the inflation over the last 2 years hasn't been taken into consideration. House prices have only just reached 2022 peaks today, so in 2 years, zero growth. And with that in mind, inflation during that time has been rampant. The value of money is less. 5% next year, 5% the year after. I think we're looking at a buoyant time. But what are your thoughts? Put them down in the comments. As you know, on my videos, again, until I get to 10,000 subscribers, I answer every single one. Unless you're a spam bot, in which case I block and delete you. But guys, I hope you've enjoyed this video. I will see you on the next one, Monday, Wednesday, Friday. Put your thoughts down in the comments and I'll see you soon. Cheers, guys.